Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, we've got Steve. How you going, Steve?
Good afternoon, Ollie. Yeah, great, especially after a eventful weekend. Australian CryptoCon at the ICC Sydney, so definitely loads of fun there.
Oh, it's lots of fun, mate. Did you get the chance to try the wind tunnel?
No, unfortunately not. I didn't want to embarrass myself in front of the big crowds.
That's all right. Could have just embarrassed yourself like I did. Okay, so let's move into the agenda for the video ahead. For any returning viewers, this will all look very familiar. But for any of our new faces here, this is how we usually run it. So, starting off, we'll take a look at the major events from last week, analyze the key themes and what's driving price and the underlying there. We'll then move into the week ahead section where we'll put a spotlight on some of the major events for the week coming up, give our take on where we think this fits in with our key themes, and give our speculation on where we think prices will go. We'll then move into the technical corner where we'll be putting a spotlight on a couple key different markets and analysing them using our top-down analysis. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So starting off the last week's section, we've got on screen your guys' top traded products from last week. I think the one that really stands out to me, I'm very surprised to see a Swiss franc pairing in there.
Yeah, definitely. I've actually never seen the Swiss franc in the sort of products, and it's kind of come out of the blue. So very interesting to see actually with the Swiss franc
First,
pair.
first time I've seen it on this top 10 particularly.
Yeah, and it's not part of the G10 currency, so it's a minor pairing. So um,
Interesting. All right, well, let's go in and see what is actually moving the prices then.
yeah, no, we early we saw the RBA minutes, which there weren't too many sort of surprises when it comes to the RBA minutes. It did, we've had, for example, Governor Michelle Bullock has previously indicated that we're probably towards the bottom of the easing cycle within Australia. So we also saw the signal that it would be only entertaining a cutting interest rates if there was a material deterioration in the labour market. So really displaying that sort of caution approach. Previously, we've mentioned that CBA and NAB have basically almost ruled out the interest rate cuts in 2026. ANZ and Westpac are more hopeful of at least a minimum of one cut, while HSBC have actually said they don't expect any sort of interest rate cuts in 2026, and that there could actually be interest rate rises in 2027, mainly due to that sort of higher inflation print. So quite interesting to see with that. It didn't really give us any sort of surprises. We also had some of the other sort of data from Canada and Europe and UK, but I really wanted to really touch on really what happened within the US. So the US was quite interesting, and it really impacted a lot of the markets, so a lot of the indices, as well as gold, for example. Gold saw a very volatile week, probably as volatile as anything. So we looked at, I guess the market was really looking at all the Nvidia sort of earnings throughout the week. So they released the earnings. It was a beat. The expectation was that the AI could have been more like an indication that it is a potential bubble. There is still mixed views. So there's I guess the high valuations and sort of expectations. Obviously, Nvidia's CEO Jensen Huang actually mentioned that he doesn't see AI as a bubble, although there are other so people just still on the fence when it comes to that. So that actually helped the market. So we saw basically the Nasdaq, as well as quite a few other sort of um, indices have a sort of good sort of rally for that day, but it was really then reverse the following day. So the following day, we actually saw the FOMC meeting minutes around the US Fed that was released, and there was a bit of a surprise and leaning towards more of a hawkish sort of tone due to inflation. We saw the CME Fed tool, which basically tracks the probability. Last week, it went as low as I could see as 33.8% when I checked during the week. But I heard that was as low as in the 20s. But now, as of today, it's actually 67.3 when it comes to the probability of an interest rate cut in December, which is going to be the 10th of December. So it's really a 50-50 call. And that sort of uncertainty brings a lot of volatility, as we've seen. We also saw the September non-farm employment data, which was actually positive. The unemployment rate being being a bit higher than expected, but a lot of the sort of data points was really around the sort of September. We've already got clarification from the White House that there is no real October data, and the Fed is still kind of flying blind over December sort of decision. So, considering with the November, a lot of the November data is going to come out after. It's one of those 50-50 calls, I'd say. We also saw Bitcoin. Bitcoin did actually touch 80.6 thousand when it comes to the actual low. So that was in USD. It did recover over the weekend. It's now traveling around that sort of 87,000 USD. So maybe it was because of Oz CryptoCon. We just don't know.
A lot of people buying it must have been, right? But you
Yeah,
compare that to last year as well, CryptoCon. It was just when it cracked 100K. Some massive celebrations in there this time around. It's just the conversations were so different, wasn't it?
yeah, no, definitely. It basically cracked that sort of 100K on that Friday, and this is totally different year where it was trying to really test that sort of support. So hard to say with the surprise lately. We also another sort of notable event is around the Russia-Ukraine peace talks. So basically, there's real pressure with Zelensky, so Ukraine president, or prime minister, just to actually accept the Russian deal. So there are talks by Thursday, but there could be countermeasures coming up this of the weekend after Thursday. So interesting to see. We'll go on to this week's, which ties in perfectly to this week. We do have a public holiday. This is actually the last of the year when it comes to Japan. So we've been talking about, I think we've seen six. This is six.
Crazy. I'm getting
Which
so
is,
jealous, man.
yeah, it's one of those things. So, yeah, low liquidity today, and we've probably seen, especially within, for example, gold, where it's really been ranging. It hasn't really done much during the Sydney session, obviously, with no Tokyo session coming in. That's a low liquidity. We do have also the US Thanksgiving this Thursday or Friday, depending on time zone. But that's also going to really add to the volatility this week. So I guess the key data points that we're looking at locally is around the CPI, so Consumer Price Index, so year on year. So the sort of expectations will kind of get a gauge as to the sort of inflation, see whether that's going to really sort of impact the RBA. But looking at the ASIC tracker, I think we last saw was a 6% chance of a rate cut for the actual December meeting. So I don't really. I think everyone's kind of pretty much priced in that we're not going to get a rate cut, and it's hard to see with the sort of future sort of cuts. We've got the RBNZ, the cash rate, so 20 like an interest rate cut of 25 basis points. So really, that's going to be really interesting for our neighbours. Obviously, the sort of New Zealand we were talking about a little bit earlier that will surprise at the struggles within the economy. So fingers crossed, it's a bit more positive out there, camp. But yeah, it's hard to see how low the actual cash rate is actually going to go. So that'll be interesting to see with that. We've also got the BOJ core CPI, so looking at their sort of inflation. So there's been mixed talks when it comes to their central banks. I saw that earlier today, we saw that there could be actually a interest rate hike, which is actually uncommon for Japan, because generally they're keeping interest rates fairly low. So it could be as early as December, or even into 2026. So that's really going to be a really interesting take as to how the Japanese sort of economy is going. There was also last week we heard about a potential stimulus package out of Japan, while there was also Chinese and Japanese tensions. So a couple of weeks back, we saw the new Prime Minister of Japan actually mention around Taiwan what would happen if China was to approach Taiwan, and they would actually be sending across, potentially their military to kind of help Taiwan. So that's really actually caused a lot of tension. And China's actually come out and actually said that they want Japan to actually take back those remarks, and that to really side on caution. So that is something that could definitely impact, obviously, with the Japanese public holiday today. You wouldn't expect too much sort of movement. We've got also the China PMI data, which could impact the Aussie, for example, and a lot of the sort of US sort of data points. It'll be interesting to see with the sort of GDP. So we saw obviously a surprise of GDP previously, and a lot of that's to do with the AI spend. We've got the PMIs around the sort of businesses, but some of that sort of data points is really the September print. So I'm not sure if that's really going to impact too much, but also the initial jobless claims. And there's the UK budget, which what do you think about the UK budget, Ollie?
Well, just to give a holistic view on it, so in her budget last year, Rachel Reeves did announce a series of tax hike, and added roughly about £25 billion into the national insurance scheme, as well as a raise in their minimum wage, which did add significant pressure onto inflation in the UK. So with this coming budget, believe coming out on Wednesday, Rachel Reeves is expected to do the exact same again when it comes to tax hikes. So I did read an article on the BBC by someone named Simon Jack, who's an economist over at the BBC, who has commented on there that there is a firm called Capital Economics who's estimating that these tax hikes should take about 0.2% off of GDP for 2026. And the expectation on that essentially is that the Bank of England will look to lower rates to stimulate the economy on the result of this. So generally, I would expect this to be quite positive for the FTSE 100. However, I personally do think that ahead of this budget, and particularly in the short term as well, I personally do think that we will see a bit of pound weakness alongside FTSE weakness. Given that inflation is being at the forefront of a lot of conversation in the UK economy at the moment, I don't think that any interest rate drops by the Bank of England will be helpful to that as well. With inflation going out of control, it is going to weaken the pound and it will weigh on business confidence overall. So, I mean, I'd love to keep talking about the budget as well, but just keeping the eye on the time here, I will switch into the technical section now. So let me just share my screen with everybody. While we wait for that one to come up as well, just want to make a quick comment. Say hi to Koi, who has reached out to us in the comments on YouTube just now. So thank you very much for that. So starting up on your screen here, you'll see the US dollar against the Swiss franc. Obviously quite topical given that the Swiss franc was in our top 10. So for where we're sitting on prices now, I'm looking for a signal to see either if the more short-term bullish channel will continue on, or if we will be ranging similar to what we have done since since around start of October actually. So for where prices are sitting now, if we see prices continue on its daily trend so far, being up on the day, If we see prices move higher and then break and hold above its more recent swing high there, I do think we could see the prices push further up towards its moving average. So as I say, we're looking for a confirmation of bullish momentum with a break over its previous swing high, where I'll be looking for an entry to target its next moving average, which actually did previously act as a support around mid-June. For this one as well, for in terms of risk management, I'll probably be looking towards the Friday highs as well. But conversely on that, if we do see the prices move higher and fail to break and hold above its more recent swing high, could see it trade back into its moving averages as it has done now. And if I see a break lower than the Friday low, I'll be looking for a selling opportunity as the market goes closer down or further down towards its previously tried, tested, and respected support as well, with a stop at the Friday high as well. So next, I wanted to look at the NASDAQ, and I'll start off with the NASDAQ on the weekly, just so you can get a bit of an understanding of where we've been for the year. It's been very well documented that we have been in a pretty strong bullish trend in most equity markets across the world. Seeing on our moving averages, they are all fanned out, evenly spaced, all pointed in the right direction, which is typically a bullish indicator. But to look at the most recent price action, we can see we have last week we closed out our third consecutive down week. And the last time we did see this was right before we did see a big change in momentum to go quite bearish. We saw around mid-Feb the prices to 3 down weeks in a row and continue as it traded further into its moving averages. So I want to have a look to see if history will repeat itself in this occasion and see if we will be making a move lower towards its moving averages. So moving now into the daily chart for the NASDAQ, for seeing where the prices are for the day. Now, I've highlighted on here a support around the 24K, which I do think is a psychologically significant price point to give an indication of where momentum will be going. So for where the prices are sitting on today, I think if we do see a move lower down towards this support price, and a break and a hold below this support, I'll be looking for an entry for the prices to move lower, which actually would be in this descending channel as well, which you can see based on a series of lower highs as well as lower lows. However, if the prices don't make that move today, I think they also could make a move up towards their moving averages, namely being the 50-day moving average. And if we see the prices move up towards this moving average, find resistance, I do think it will then move further lower to challenge this price support. Otherwise, if the prices break this one as well, move up towards the 20-day moving average, it'll still be in our descending channel. But I think if we're looking for any buying opportunities, I would be looking for a break above its prior resistance at the 25-2 sort of mark there. But given we are sitting in the middle of a channel, we're sitting in the middle of a trading range, it is very important to manage your risk if you are looking to trade into the NASDAQ on either side of that one. Okay, so that brings us to the end of the technicals. So now we will move into the Q&A section where Steve and I will be answering some of your guys' most commonly asked questions from last week. So Steve, would you like to take it away with question one?
Yeah, so question one, over the weekend, obviously we had Oz CryptoCon. So talking about sort of crypto and really how CFDs play into into it all. So I guess because we had obviously crypto exchanges, we also had the sort of question about how would I manage risk against crypto volatility using other sort of assets. So very good question. I guess with Bitcoin, for example, it does actually follow the NASDAQ as it's fairly tech heavy as well. So it's more of a risk on sort of sentiment. A common product that we see traded here is also gold, which is more of a safe haven and risk off approach. So you can kind of like look at sort of strategies generally about using that sort of hedge when it comes to difference of assets or even currency risk. So there's different ways that you can actually use sort of multi-asset instruments. So it's a good way to ensure, especially with volatility, for example.
All right, thank you, Steve. And I'll take it away with question 2. So, question I'll be getting is, what is the significance of moving averages? So, for a moving average, this is a lagging indicator and can be used to identify trends or potential trend reversals for a given market. So typically, we will see prices react to these key levels on our moving averages, and this can be for several reasons. One of the main ones is that we'll see many traders refer to these levels as potential support and resistance with prices, which can influence markets where there could be a bunch of exit or entry orders for a market in particular. So when using the moving averages for technical analysis, you wouldn't want to use this in isolation as an indicator by itself, but rather as a cluster of signals or as part of a cluster of signals to build your argument for a trade. So you want to consider the moving averages in different time frames to see how they react with one another, any divergence or convergence in the moving averages for different lengths of time, or alongside your other technical indicators to supplement your trading strategy. So that brings us to the end of the Q&As. Just quickly as well, on your screen, you'll see a couple of photos from CryptoCon in the week just gone. It was lovely to meet so many of you guys that came down. Lovely to everyone that came along to say hi. I think it was a really fun event. Personally, I think it seemed to get similar feedback amongst many people. So for anyone who's around next year, 100% come down and say hi. So that brings us to the end of the video today. Recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link into the VIP chat room alongside on Telegram. For anyone who's looking to get involved with the Monday Open, send any questions through. Please feel free to reach out to us either through the VIP chat room or reach out to Steve or I directly. So thank you everyone for watching, and Steve, I'll see you later.
Thank you, Ollie, and enjoy your evening, everyone.
Cheers.